Hello and welcome to On the Record with me, Shireen Bhan. Every year, my guest joins me to talk about the road ahead as far as the diversified conglomerate is concerned. Joining me once again on the program today is Sanjiv Goenka to lay out the roadmap for what he has in store for a whole host of his companies. Mr. Goenka, it's always a pleasure. Many thanks for joining us here on CNBC-TV18. It's great to have you back. It was last July when we spoke, where you laid out a very clear roadmap for each of your businesses on CNBC-TV18. Before I get to the individual businesses, I want to understand from you the sense of confidence and optimism that you have with respect to the larger economy and each of your businesses today. We had the finance minister yesterday speak about the fact that the government has done all it can to try and get industry to do more, to invest more. Has the government been able to unleash the animal spirit, so to speak?
Well, thank you, Shireen, for having me once again. It's always a pleasure. Since we met last time, I think the confidence has grown a few notches in both our ability to implement what we had laid out, and that is largely because of what the government has done in terms of policy, in terms of environment, in terms of approach. I think this whole Modi vision of build for the world in India, and believe in yourself, believe in India, as an Indian, believe in what you're capable of. That confidence, that self-assurance, that backing that the government gives has been great. Not only for us at RPSG, but I think for the entire corporate India. And that's why you will see lots of corporates committing to large-scale capital expenditure, and of a kind that has never been committed. So since we met, last year I remember telling you that our target is a 2 lakh crore market cap. That we are now fairly confident of doing. Our internal targets have actually been scaled up since then, despite the stock markets not being at their best. And we had talked about investments. That number has gone up considerably. And as we move forward, the implementation part of each company, each project, each improvement is actually a lot more secure because A, we've made a very good start, and B, now we are that much more confident. So from a plan, it is now in action.
Well, let's put some numbers down then. As you pointed out, that internally you have decided to revise upwards a lot of the targets that you had spoken of. So from an investment point of view, from a capex point of view, what should we now expect given the sense of confidence that you just shared with us?
So over the next 5 years, what we are committing to is a total capex of about 1 lakh crores, largely in the energy area. It'll go also in chemicals, but chemicals is not that capex intensive, as you know. So renewables is going to be a large part of our investment. When we met last year, we talked of 3 gigawatts. Yes. Now 3.2 gigawatts is under implementation, advanced stages of implementation. Another 4 gigawatts is getting close to closure. And our target is to get to about 10 gigawatts over the next 6 years.
10 gigawatts by 6 years. So would it be fair to say that at this point in time, the renewable push is what is most exciting for you within the group? Of course, not to say that you're ignoring the rest of your businesses, but both in terms of investments as well as in terms of the kinds of bets that you intend to make, it's the renewable side of the business that will get the lion's share of the attention and resources.
Well, renewables is certainly something that's very attractive for us. And let me make an announcement today on CNBC-TV18. It's not only solar and wind hybrid projects that we are implementing. We propose to get into module and cell manufacturing. Our first gigawatt of module capacity goes on stream in the next 45 days. So that's something we've been quietly implementing. And in the next 3 years, there'll be 3 gigawatts of cell and 3 gigawatts of module capacity that will go on stream.
Well, thank you, for breaking the news here on CNBC-TV18. So you heard it first, right from Sanjiv Goenka on CNBC-TV18. But, what will the benefits be on account of these bets that you're making? You just gave us an outline of what you expect over the next few years, both in terms of cell as well as the module. How do you see this benefiting your business and also the numbers for you going forward?
Well, one is that given the thrust we're doing on renewables, a large part of it will come into our own facilities. Mm-hmm. But the market for these products is growing. I mean, the more companies invest and the more self-reliant India becomes, the more cells and modules manufactured in India will get sold. So therefore, we do believe that there's a very good business model for that.
So from an export point of view, is that going to be something that you're looking
at as well? Yes, absolutely. Absolutely.
I want to come back to the push on renewables and understand what it could potentially mean as far as your own bottom line is concerned in terms of cost savings, because you do intend to disproportionately move towards being able to use your own renewable energy.
So our target is to get about 45 to 50% of our total sold power sourced from renewables. And we will try and see that it largely comes from our own capacities. It's always not possible because sometimes, you have, not sometimes, you have to have tenders. And so it really depends upon how competitive we are. We're confident of being competitive, but at the end of the day, we have to be competitive. But the very fact that you can get from generating sources which are under your control gives you that much more security of supply. So I think there is a delta in the pricing between thermal and renewable. And regulatory commissions don't always give you your entitled fair return. And to that extent, this mitigates the need for tariff increases or the extent of tariff increases.
You still haven't left me with a number, the ballpark. What could it potentially mean in terms of savings as well as addition to the bottom line?
I think what it will do is huge cash flows, which will be additional. So in terms of the regulatory assets that the companies have accumulated, I think that could get liquidated very fast.
Well, speaking about the energy business, since we are talking about that, more states looking at privatizing. UP, of course, is the big one. The expectation is perhaps by the end of October, we should get done as far as the RFP is concerned. How aggressive do you intend to go after that market?
We're keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful privatization cases of power in the private sector. And it is UP's most successful utility. So we have now begun to understand how to operate in UP. And Yogi Ji's government provides a very secure law and order, and so helps a utility for sure. Mm-hmm. We're keen, and we are going to bid.
You're keen, you're going to bid, but is there a preference on where you would find yourself best placed strategically? Because, of the 5 zones that the government is looking to bid out?
Yes, there is, but I'm not about to spell it out here.
Okay.
Not yet.
Not yet. Hopefully the next time we meet. and there should be a decision. But that's as far as UP is concerned. What's the indication that you get from other states at this point in time in terms of their own privatization efforts?
I do get the impression that if the UP one happens fast, which it is likely to, there will be a couple of other states which will move in. In Maharashtra, you're already seeing applications for parallel licenses by Torrent, Tata, Adani. So I think this whole thing is moving, and it's moving reasonably fast. So you could see a couple of other states jumping into the fray before the end of the year, before the end of next year.
So let me, before I move to the next business, get the big picture headline for the energy generation as well as distribution business for you in the near term as well as the medium to long term.
Well, over 3 to 4 years, profitability to, I wouldn't like to specifically say, but I think our internal targets are at least a 2.5 times growth in profits. At least.
I like the fact that you stressed at least.
So I think there is a reasonable level of confidence on that, barring anything unforeseen, because utilities are never completely within your own control. Mm-hmm. But yes, there's sufficient action that has been taken to give us confidence that we will get there.
Well, yes, the stroke of the pen risk exists as far as all regulated businesses are concerned, but that's a different story. Let's now move to the engine of growth that you were most excited about when we spoke in last July, and that was PCBL. You know, the outlook for that business, you continue to be as confident as you were when we last spoke?
Yes, absolutely. The chemicals business and the carbon black business indeed has gone through a little bit of a low for the last 2 quarters. It'll take 1 more quarter for it to completely bounce back. But yes, over a 3-year horizon, 4-year horizon, we're exactly where we had planned to be. So we've signed up for a new plant in Andhra. Our first phase of expansion in Tamil Nadu. The Tamil Nadu plant has since got operational, fully utilized. And now we are doubling capacity there. We've got land for a new facility in Andhra. We're setting up yet another one in Mundra. We're looking at a plant in Russell Khaimah. We're looking at value additions. A nanosilicon plant, which is like a pilot commercial, gets on stream in the next 2 months. So yes, significant action has happened there. And that gives us confidence that we are well on track to our targets.
The proportion of the specialty chemicals business, you know, from where it is currently today and where you believe it could be on the back of the steps and the measures that you are taking?
Our target is to increase our specialty business by about 2.7 times from where we are.
By when?
By 28-29.
28-29. You know, not just PCBL, but across the group, you've been fairly acquisitive across each of your businesses. At least as far as PCBL is concerned, do you believe that for now it is going to be much more focused on consolidation, or do you believe that you will potentially look at more acquisitions?
We are always open to acquisitions, and we always look at opportunities that come our way. They should fit in from either a market perspective or a domain perspective or a cash flow perspective. So if one of these 3 criteria or all of them are met, then we are certainly very interested.
But as of now, you believe you have enough to digest?
That's right.
On the back of the acquisition already done?
Absolutely.
Let's talk about First Source, because that was another engine of growth that you were excited about. Double-digit growth is what you have been able to deliver. But how do you un-BPO First Source?
Well, un-BPO is something that we are very keen about. We were a BPO company. We are not a BPO company, and therefore our slogan is un-BPO. We are looking at AI, agentic AI, and we are looking at being solutions providers rather than call centers. And that's beginning to work. We used to get 3 big wins in a year. Last year, we got 3 big wins every quarter. This year, we hope to get 4 big wins every quarter. And we are now at a steady run rate of about 100 million wins every quarter. So let me just put it in perspective. When you talk of, say, since the time we last met and now, we've got about $540 million of additional business at 18% margins. That roughly translates into close to about $100 million of additional contributions. You're already expensed out because you've invested in the people and the SG&A and that whole thing. So now the entire contribution will come to the bottom line. So that in itself is one chunk. Then right shoring is the second one. Attrition is the third. Getting greater wallet share from our existing customers is the fourth. And then this whole AI and agentic AI piece, which we are working very actively on. Our AI labs in London and Melbourne have been great successes, and that's just the beginning.
You know, this transition in the quest to un-BPO yourself and move into an AI era, is this largely going to have to be driven by inorganic opportunities and inorganic growth? Is that going to be something that you actively pursue?
We are looking at, we've always looked at opportunities, and we have acquired over the last 18 months 4 companies.
Yes.
And we will continue to look for opportunities that excite us. But now it's going to be either led by a domain that we need, a geography that helps us. For example, we're looking to grow in South Africa. Or it gives us access to a larger number of customers.
The headwind potentially for this sector, and this is not just for FirstSource specifically, but for the industry, what's happening in the US, you know, with regards to the kind of restrictions that President Trump is looking at imposing and so on and so forth. How vulnerable do you believe you find yourself to those potential changes, and how do you fortify yourself from those proposed changes?
You know, honestly, a large part of our workforce was in the US, and we were in the process of moving part of that workforce from the US elsewhere. But now, with this, we won't do that as much as we had planned for the immediate future. So it doesn't impact us from our past. But yes, we are looking at some stage, at some time, we will have to right shore because costs are a factor.
Well, costs are a factor, and that would have an impact as far as your margins are concerned. So if you push back your plans to, in your words, right shore, what could the implications be on margins in the near term?
We are right now shifting some of our people to Mexico and some of our back-end work to Mexico, which is proving to be a very good opportunity. And it's working well. We just started that a couple of quarters ago, and that's paying us good dividends. Overall, I think we are on track to get to about 2.5 to 2.6 times growth in profitability over the next 2 to 3 years. I think we are very, very sort of, with the orders we have, we are almost there. I think we have to do a little more on the cost side, which we are doing. And I think it's sort of beginning to fall into place.
You know, what we're seeing, though, in that space is deals like Capgemini WNS, and WNS saying that, look, it's hard in this market, in this environment, to keep at it solo. You don't believe that to be the case?
You know, for us, I think at one stage we were not exactly up there. So it's easier for us to move down. It's easier for us to move up. And for somebody who's right up there to move down. And if you see the last 3 or 4 quarters, we've been pretty much number 1 or number 2 in terms of growth rate. And that's a trend that we expect will continue, at least for the next couple of years.
You know, the global aspiration of the group as a conglomerate, as a diversified conglomerate, would it be fair to say that the aggression on increasing your global footprint across each of your businesses is now picking up pace, picking up momentum?
Yes. Today we have a presence in 35 countries. And the way I look at it, whether we have our facilities in India or elsewhere, I mean, as an Indian, I would like to have as many facilities in India as we can. But we are serving the global market. And that is something that we will continue to do with greater aggression, with greater efficiency, and hopefully greater margins.
And hopefully greater margins. But on the renewable side of the business, to come back to where we started, eventually, would you look at a listing? Because, that the growth aspiration
Yes.
there is significant. And what could the potential timeline be?
Well, as of now, we are not listing it for the next 12 months. But thereafter, yes, it depends upon
So that's not a very long window. So
No.
you're saying that potentially after in a year's time, you could look at it?
In a year's time, we could start looking at it.
And outside of course, tapping the markets for the renewable side of the business, the capex plans that you outlined, the funding for that, what's the
The
plan?
cash flows over the next 4 years are reasonably strong and robust. And we believe in a debt-equity ratio of 1:1. The worst at any point in time should go as 1:1.5 and not beyond that. So I think we will be very much within that parameter. We'll be very conscious of that. So there are no immediate no immediate capital raising plans. But frankly, if you don't raise capital, your growth gets limited. So over a period of time, over the next 12, 18 months, there would be capital raising.
There will be capital
There will
raising.
be capital raising.
And outside of the IPO, what are the other means that you're considering in terms of capital raising?
It's a little early to specifically spell out, but there will be capital raising as we go forward, but not immediately.
And what would you be looking at in terms of fundraising to fuel the kind of growth aspirations you have?
I think these aspirations are well served by the internal accruals that we will have. But I think our ambitions are defined for what I just outlined to you, but they're not limited to just that. So I think, hopefully, by the time we meet next, there will be some more growth in terms of thoughts and plans and action, which will need more capital. So right now, it's not specific. It's more at an ideating stage. But yes, 12 months from now, we should be looking at raising capital.
Okay, let's talk about the unlisted part of the business, or may I call it the passion part of the business. On the sports side, I mean, are you looking at any further opportunities that you're getting into?
Well, we're very happy with our expansion into South Africa and England. And I don't know whether any other leagues will look at privatizing. There is some talks.
Were they to come up for privatization, any other leagues in any other parts of the world, would you be interested?
The Caribbean, we are not. We examined and we didn't take that opportunity. The American League also, we didn't take that opportunity. We thought that the terms were a bit one-sided in favor of the American owners. But if the Big Bash were to come up, yes.
So the Big Bash would certainly get a serious look.
For sure.
Okay. The GST cuts come into effect on the 22nd of September, which is Monday. The expectation is that this is going to provide a boost to consumption. From your vantage point, what do you think it could potentially mean?
It should spur consumption significantly. And I think this is very bold. What the finance minister has done is incredible. It's beyond what we expected, for sure. And therefore, corporate India can go and ask for more. But frankly, there is nothing more that you can ask for. It's now for us to go and perform. Up
to you to perform. Saregama, let's talk about that, because that kind of quietly moves along and is a significant revenue kicker for you.
It's a revenue kicker. It's given us about 23% annual CAGR in terms of profits, and that will continue. But I think there are two things that excite me a lot there. So one is this whole AI piece, and you know what we're doing is we haven't spoken about it so far.
So it's another news break here on CNBC-TV18.
So most of our catalog, we are using AI to do fresh videos.
Okay.
So you have
all the classics.
All the classics.
Yeah.
So you will have now AI-generated videos which are completely modern. And so that is something that we're very excited about. And that you can produce at a cost of less than $1 lakh. So if you were to take your 20,000 biggest songs, say, and did all of them in terms of videos, it's 200 crores in terms of total investment. At the outside, it could be less. And put them on YouTube. And that could be a huge revenue generator. That's one. Two is we are looking at getting into AI-generated films.
Okay.
So the whole film
will be AI.
It will be AI.
Okay.
And so you produce it at a fraction of the cost. So the whole entire film, so the scripting is normal. Everything is normal.
That's still people.
That's still people, but the whole production and the whole casting is AI.
So there won't be any actual actors?
No.
Okay.
And we are actually looking at creating our own version of
AI heroes and heroines.
And heroines, absolutely.
And when does this get off the block?
So it's now all under production.
When will we see the first AI film being
hopefully
released?
in 12 months.
In 12 months?
Hopefully.
And are you looking at a theatrical release? Are you looking at OTT?
We're still working that out. It could be theatrical, it could be OTT, it would be a mix. But Narasimha has done very well. That's animated, that's not AI, but that's animation. That's done extremely well. So you will see us doing a lot of that. And so that's very exciting. This whole concept of re-energizing your repertoire and producing new content, new films, which are scripted by the best. But you're not dependent on dates from the best in the class.
Or having to sign big paychecks, which is the majority of the cost of a film.
Exactly. So you can produce the entire film at a cost of less than 5 crores. And if you can get 10 crores revenue out of it, it's 100% return on investment. You know, and this is a model that we are so excited about.
Well, I don't know how much of Bollywood is going to be excited about this idea of yours, Mr. Goenka, and how it plays itself out. But what is the library that we're talking about that Saregama has the potential to monetize in this AI fashion?
1,87,000 songs.
1,87,000 songs. Do you have a preference as far as your own playlist is concerned?
I have a playlist, but that doesn't govern which is how we are going to prioritize this.
What's the top song on your playlist?
Kora Kaagaz Tha Ye Man Mera.
So it kind of is almost symbolic of the way that you're planning this business. It's like a canvas that you're painting over, right?
Completely. It's actually this is headed by my daughter.
Yes.
And she's the one who's doing this. And as much as the renewables is by Shashwat. So I only come here to make
projections.
The projections, but
they're doing the work.
Yeah, they're doing the work.
But speaking of Shashwat, it's interesting. I was talking to you about the comment that Parth Jindal made, where he said that he's much more calibrated in comparison to his father. Would you say that's the same as far as you and Shashwat are concerned?
Shashwat's my voice of sanity. So he'll very gingerly caution me that maybe you should look at this and maybe you should look at this.
It's interesting that the next gen is far more calibrated than the previous.
And he's far more researched. And he's far better read than I am. So I think he's been a huge asset as far as RPSG is concerned. And one of the reasons that we can think like this is because we have talent like Shashwat's.
So finally, let me end by asking you, you've talked about all the headroom for growth and the tailwinds that you want to leverage. But what could be the potential headwinds that you will need to brace yourself for?
We don't know how AI is going to impact us. So far, we are seeing the positive impacts on our business. In FirstSource, in Saregama, in our existing businesses where routine activities are being outsourced to AI. But we don't know how AI is going to really impact us going forward or what shape and form AI will take. So that is something that's frankly unknown. And that could play out in different ways. How do we keep abreast of newer technologies and newer molecules in the chemical space? So whereas we have invested in an R&D center in Palej, in one in Belgium, but I think we need to do a lot more and quicker and get in better resources in terms of scientists. And yes, nanosilicon is one, but we can't be satisfied with one. And so that's how fast we can stay abreast or ahead of technology, and that's going to be the biggest challenge.
I'll end by asking you, while you talk to us about a whole host of your businesses which continue to drive growth for you, what about retail and FMCG, two yums, as well as wellness? Is that kind of pushed out,
No.
pushed back on the list of priorities?
Well, retail is managed for value. So retail is not something that we are looking at big ticket growth. FMCG is something that we are growing very well in. And in the next 3 years, we expect to get to a break even. At 1,800 crores revenue, we break even. And we expect to get there in the next 3 years. Tuyam is doing well. The snacking space is going very well. Our Bhoot category has done exceedingly well. It was one of the things that we launched. It started with Bhoot chips. Now all our products are available in the Bhoot category, and we can see other FMCG snacking majors coming out with Bhoot equivalents, and that is the surest way to say that this product is succeeding. Our wellness is going well. Our Ayurveda-inspired medicines, it's fledgling yet, but very exciting products, very, very exciting products. It is available online, but we haven't really given a marketing push yet. But we are very excited about those products. The products are brilliant. And several people, like several thousand people, have been using it over a few years, and with great results. And now we are ready for a very big launch. Shashwat drives that business. I'm not exactly up to speed as to exactly when he is going to go full hog with the marketing, but I'd reckon sometime in the next 6 months. But the products are brilliant. The sleep drops, for example, they're flour-based, and they're very effective. There is Chyawanprash in a toffee form. There's Shitopaladi in a capsule form. The conventional kadhas that we've all grown up having are now in the form of infusions.
Right.
So there's a lot of innovation with tradition that's gone into the development of these products. We have to now market it.
Do you need the sleep supplement, or are you being able to sleep absolutely fine given the fact that things seem to be in place at this point in time?
You know, my wife complains that I go off to sleep the moment I hit the bed.
Which is not a bad thing at all.
Yeah. Well, for me it's great, but she somehow seems unhappy.
Mr. Goenka, always a pleasure. We look forward to hearing more from you as you roll out the plans that you've laid out for us here on CNBC-TV18. And we look forward to our next interview together
you,
as well.
Such
Always
a privilege.
pleasure. Thank you so much
Thank
for joining
you.
us. Well, that is it on this edition of On the Record with Sanjiv Goenka. From all of us here on the team for now, many thanks for watching. Do stay tuned to CNBC-TV18. We're back in a moment with the news.